Good morning, everyone. Good morning. Welcome back to the channel. Been about a week since I've recorded or streamed. Just back from LA last night. Was at Fred's Bitcoin Alpha conference. Very exciting, very fun. Always good to meet people in the real world, especially when they watch your stuff. Very pleased to meet so many people in general that like to geek out on the numbers, but specifically there were some people that really enjoyed the channel. So appreciate that. I think I'll have more full thoughts on this in the next few days. My head's a bit in the clouds right now. I don't make too many journeys beyond, let's say, a 7-hour time change. This one was 10, so quite a bit. Very good to be back with the family, though, and back home and back working again. So, like I said, I'll do a more full update, I think, later. But it was great show put on by Fred and Ben, and I'll have some more to say about it, I think, in the next couple days. Although I do want to say, of all the people that I met, and they were really nice people that I met all over, I think the most special one for me was by a former rocket scientist that worked for NASA in Huntsville, Alabama, worked on the Saturn V. And it was amazing that he asked, how I was doing after the long trip. Clearly been watching the channel and said that he enjoyed my stuff. So it was really special. I had met so many different people, and the name tags the names can get confusing after a while. I think this very seasoned, wise old gentleman's name was Steven. So Steve, if you're watching, thanks for that quick chat that we had Friday morning of the conference. That was really nice. And yeah, I used to love the space race stuff growing up, even though I was, really beyond it when I was young. But the Soviet American space race was quite a good peaceful journey for humanity. Even though, as a lot of people forget, when the Soviet Union ended, the Russians had more spies in America than America had all over the world. Something a lot of people don't think about when they like to hate on the U.S. government. But it's a very good peaceful thing for humanity, the space race. But yeah, that was pretty cool. As someone who worked on the Saturn V is watching my channel, so I appreciate that, Steve. All right, so I guess we got to get right back into it. Some charts. Good morning, MP. Might be tough if we go below 100. Good morning, Siradon. Good morning. Thank you. I wanted to say something about this chart with the log linear nature of it. Good morning, Gio. Welcome back. We'll get to where we are in a minute here, but obviously this log scale, so we go all the way back to 20K, and the nature of the log scale changes, right? So this is not that extreme of a log, right? The base from one level to the next. Whereas if I say zoom it out, then we go to base 100, base 100. So one line up is 100 times bigger than the next. All right, when you're in the full zoom and you get the power curve going all the way out. If you just go to, like, say here, we're covering 3 cycles, right? Assuming that we're in the moving to the peak of a third in this zoom. You can see a lot of detail here in the price, right? This is not such a scientific observation, but it's just to show you how far away we are from some moves. Because I know a lot of people think that we're going to 30,000 next month or we're going to 300,000 next month. It's kind of wild. Bitcoin is volatile, yes. But notice how we have the power curve. All right, we can see the detail in the price. And it's not a huge log. Okay, now I'm back to log 10, base 10. Just it's automated, whatever the chart says. But as I put the different bands on where the price could possibly go, this thing can get more extreme. Okay, so it doesn't really change here. The 60 and the 70th percentiles. Power curve is a 2/3 of the time sort of enterprise. So 2/3 of the time the price is below this black line. All right, but now let's look if we go a little bit more extreme. Let's look at the 5 and the 8. Maybe I didn't look at this too. All right, 4 and the 9. And the 3 and the 10. Okay, it switched just a little bit there. This is actually too far away to illustrate my point. Slight false start. Let's zoom in a little bit more. All right. Again, very sort of weird looking base. I don't know what it is. Sort of. It's kind of like base 5, but obviously with some half steps. Doesn't really matter. What I want to show you is once we zoom up to a big enough level, once we zoom into a close enough level, and you look at the difference in some of these price levels, there's one. Notice how the log automatically flattens it, all right? And now let's go down to 3, 2, 1. My effect isn't as extreme as it was before. All right, it flattens it more when you go to the 0. Let me zoom in more. It's nothing scientific, but I just want to show you again. All right, so a lot more detail on the price now. Lowest price in this is 20,000. Highest is 125,000, roughly. Let's do it one more time. 5th, 8th, 9, 4. Okay, there we go. The 9, obviously. What I'm trying to show you is that when you do these band observations, like it might seem like 200,000 is pretty close, but then we put the 90th, which can go up to over 200,000, and you put another level there, sort of pushes the chart down. And then when we go here, 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 all right, maybe this isn't coming off as cleanly as I thought when I was practicing this before, but there's a long way between these bands. You can't quite see it on log scale. Happened from the 30th percentile from this zoom, which only went to the summer. This is a long way away. I know like there's some bears right now that think we can collapse. The point is to show you on log space how far away something like the 30th percentile is. It's really far away. And likewise, the 90th. All right, so you see again, the chart has to compress to fit in the 90th. It's just sort of a little phenomenon, visual phenomenon of log space with this charting engine that I have. So we take out the Like, let's put the 30th back. Okay, now the chart is squished. This is more of what I wanted to show you at the beginning. Take out the 30th, 90th, 40th, 80th. All right. This is back of the envelope type stuff. But like even here, would really start to move the chart if you get outside of these bands. Okay, so above this, going to 130 or so. Below this, going all the way back to 90. And if we go back to April, we got really close to this level. And then when we were coming out of the bear, really, we were at this level. So again, I'm not a chartist. I'm not a technical analyst. But getting to the 5 is a long way away. Sometimes you can't tell in log space, right? Getting down to even 90K. Again, famous last words. I don't know what's going to happen. We could easily fall to that, let's say. But it's a long way away from what Bitcoin has typically done over the last 2 years, year and a half, 2 years. And likewise, getting above the 9 is really far away too. It's just something that, all right, look, it's, I've had a long flight. It's just something I'm thinking about. Because I know that on all the last streams that I've been doing, like I've been saying, it's totally possible we can get to the 9, which, by the way, I totally believe still. But this is a rare event. Getting to the 9 is by nature a rare event. It's a 90th percentile event. So, yes, Bitcoin is volatile. Yes, Bitcoin can have some extreme moves. But, you know, this is why it's rare. It's just, by definition, it's only going to happen 10% of the time. You know, the 8 here is 150,000, right? Today, we're not close to the 8. Get to the 9, 230. Like, that is a long way away. But on the flip side, I would say the same. All right, so getting down to the 4, the 3, look at how rare that is on the downside. Like if you want to be super bearish right now, which I don't know why you would be super bearish because we're right on trend. Getting below the 30th percentile is not somewhere we've been for 2 full years. 2 full years. So I've just been thinking about that, I guess. I know every day you're going to get new price prognostications. Have some comfort in the power curve and the deviations from the power curve. If anything, I'm still excited. Yeah, it's a bit nervous to see it go, you know, go back to say what happened here. But even if it goes back to say what happened here in the start of this year, it only went down to the 5. And let's see if the chart shifts. I like it when it shifts back to show you. So the 3 and the 4 are pretty rare, as you can tell. The 9 is also rare, yes, but we're just right on trend. We're right in the middle. Yeah, we've dipped below the 6. And isn't it funny when you look at it, things on this daily frequency, that, you know, how nervous people were here? Like price was zipping down to 105, 106. Did it hit 104 maybe? And then back up, back down again. It was a big bump last night, European time. So the 9 is a long way away, and the 8. Let's take off the 9 here. We'll see the effect. Whoop. The log scale has to shift. That's a long way away to get to the 9. But so is even the 5. Okay, you can even say the 5. Okay, maybe we'll get to it. But the 4? Again, like pretty much similar as the 3. You got to go back 2 years. On the flip side, maybe we have a flash crash. Who knows? Where you do hit this, but bump back up. I'm not predicting that at all. I'm just saying. And then one of the things I wanted to focus on was the 2017 bull, because we went super deep, all things considered, right? Some of the lowest points ever in that crypto winter. And then getting above, say, the 4 happened in February 2017. By the end of the year, 7 months late, 10 months later, we're at 20,000. I don't think that explanation of how far log scale makes the chart seem really stuck. It might have not stuck. It didn't sound as good as when I was thinking about it beforehand, before recording, but the point is to be calm. All right. Sorry, I'm going to the chat. I agree with this too. I agree with that very much. I think a deeper bear comes with a higher bull. And if you put some stock in the power curve, which I think you should, we're not in a crazy bull. Yeah, I saw a headline about that. This is the biggest risk for a puke next year, in my opinion. You've already sort of seen it a little bit with some of these companies with just stupid debt deals, convertible debt structures with too short of terms, and they can't pay the interest or whatever. No question to me that this is a very easy catalyst for a deeper bear next time. But this point still holds to me that it's not that deep bear is not coming just yet. So it's not only in dollars. Hi, Jonathan. Or Jonathan. It's not only in dollars, but it's true that the dollar is the best fit. Hi, Cyril. Still low? Thanks, Daniel. I'll try it louder. This is the thing, the live recordings are weirder than the pre-recordings, so I'm going even a little bit louder. I'm getting close to redlining on my mic, which I don't want to do. And get some vocal fry, but let me know if it's bad for people. I'll come back to your question, Jonathan. But yeah, I mean, look, it was a volatile week last week. Volatile week for the news. So much I'd like to pontificate about what's happening in Trump world with Ukraine too, but I'll not do that this show because my head's too foggy. Look, again, not being a technical trader, but looking at this, we're in a bull. I see all reasons to be bullish still, except for treasury companies or digital asset companies that are over levered. which is risk. And yeah, okay, so we dipped below the 5 here a year ago. But this seems crazy to me that we would go back. Could happen, but I'm just giving you my thoughts. I think this is the best range, basically 5, 6, 7, 8 for a while. All right, so that's 90 to 160. Trend 117. And let's see if the chart shifts. All right, again, so it shifts there, right? Getting to the 9, it's just to show you how, I don't usually highlight this, but I've been thinking about it. Like, even getting to the 9 is a long way away. Doesn't mean that can't happen in the next couple months. But notice how we have to push the axis down to make room for it. It's a long way away. Thank you, Ted. All right. Reading up again on the old Knots core wars. Had a chance to read more about that this week. You know, this was the worst of it. This was people overpaying for JPEGs. Happened here and happened here. Here and here. And here actually too, because people wanted to do crazy things for the first block of the halving. You know, they start to do crazier things, like crazier digital memories. So we did a day of 75% fees, the day of the halving. Now, still completely normal. Whoops, what just happened here? Oh, I'm just zoomed in. Still completely normal. And usually, in fact, always, when there's an unsustainable boom, you're going to see more white on this chart. So not even close there. Again, I don't remember if this was the day, but there was a day, it was the first time there was $1 billion transaction. One transaction sending $1 billion. Notice how we haven't even had that recently. And it was on July 4th, we had that big old 80,000 Bitcoin stack move. And I guess it wasn't all in one transaction. But even on the day, that didn't even really move the needle, which is something to think about, right? So one transaction around here, though I'm not sure it was this day, but it was around here. It was the first time we moved $1 billion worth of Bitcoin in one transaction. You know, tempting fate, as I remember Nick Szabo tweeted. Now, pretty normal. And even that day, which was July 4th, not even abnormal at all. If anything, more here around the election and here around the halving. Trailing 12 months, which, by the way, is sort of a lagging. It doesn't, you know, let's go to 30 days first. 30 days can show us also boom in price. Elevated, but not nearly as high as last cycle. So again, we could fall back. Price could fall. This, of course, goes down when price falls, by the way. This is directly related to the price because it's a value in Bitcoins in dollar terms. but it's not out of the ordinary. Yeah, they can boost the channel as well. Yeah, so they say. I'm very surprised. Everybody's well aware of what's happening. Um, everybody's well aware of what the Fed reaction will be. Like, it does not seem to be a, again, famous last words, right? But 2008, no one knew how bad it was. Now, everybody knows when things get a little bit dicey, those waters get a little bit choppy. They flood the markets with life rafts of low interest rates. Possible. Fees are even more. Of an indicator of something unsustainable. Again, here was the first JPEG crisis. Price absorbed it. We were at 30, 25 to 30K Bitcoin. Nothing new under the sun. Today for fees. 300, 400, 500 million dollar days. 2017, we had a $20 million day in fees. 2021, 17, and then here, same, 24. This was the record, $78 million day in fees. I would be surprised if TradFi got away with making a top in Bitcoin and there was no fees, right? So if we assume that it was somehow Bitcoin treasury companies moving within their balance sheets from, I don't know, exchanges or doing some off-chain settlements that people couldn't really quite see. Still, at the end of the day, if you want to get the Bitcoin and you're an ETF or you're a Bitcoin treasury company, there's still going to be some Bitcoin moved. I'm not going to say it's not going to happen until it doesn't happen. So far, every top has a big spike in fees. All right, here we put it together again. This is the best fundamental metric I think you can get for Bitcoin. Price of sales. All right, so this is market cap divided by total miner revenue, which is less than 20 billion at the moment. I'll get you that chart separately, but this is just the ratio. What you notice here, and I'm just picking these numbers of 5 to 8. Oh, sorry, 2 to 8. No, 2 to 7. Let's take off 2. Okay. So 3 to 7. 30th percentile to the 70th percentile. This is just the price. It has nothing to do with the bands or the multiple. It's just to show you. The data, the math is done here on this black dotted line. Okay. So we are above the 8, but I want to focus on the 7. All right, we've been above the 7 since a year ago, election time, and even a little bit when the ETFs first dropped. All right, and Price keeps rising, by the way. Doesn't mean a definite top above the 7. Price has kept on going up. But let's go back now to 2017, which I think we're going to be in store for something like 2017. I think. Just a hunch. So we got above the 7 a year before the top of 2017. All right, so just to read actually what these numbers mean for a second, the PSR itself was 32 in January 2017. That means the price to sales, or the market cap divided by minor fundamental underlying revenue. All right, so the market cap was 32 times what miners would make on a trailing 12-month basis at the start of the bull. When the bull finished, it got to 109. These numbers, by the way, always grow, so they're not exactly apples to apples. That's why you got to use the bands. But notice, whoops, what did I do there? Notice how we were above the 7 for a whole year. And then we above the 8 by summer, for sure. And then the 9, also by summer. And that triple peak here, 1, 2, 3. You could even say quadruple peak if you. So it was a big wall of worry, 2017, with a pure, beautiful blow-off top that exhausted all the buyers. Who's to say that doesn't happen again? All right, we haven't even hit the 9. Doesn't mean we have to hit the 9, as always. I've always said it, but we hit it. Every prior top, we easily cleared the 9, the 90th percentile. So again, pretty comfortable. Yeah, we've been bumping above the 8th, and yeah, we've been comfortable above the 7. But I think, if 2017 is a guide, we could do this for, well, we have done it for a year. It's true. And who knows? Maybe this is the top. Maybe this coming back down is the top. I don't know. $2021 just blew it out very fast above the 7, 8, 9. Matter of 3 to 4 months, 3 months. So 2021 was way different than 2017, which is different than now. You just have to wait and see. But I think the tops are easier to call if we just admit that as long as you let yourself sort of relax and say, okay, we've had blow-off tops every single prior cycle, right? Clearly evidenced by this chart blowing above the 9. Let's at least admit it's a possibility to happen this cycle. Doesn't mean it has to, but let's admit it's a possibility. And if it doesn't, then I'll have to go back to the drawing board with you guys and we'll sort of rethink all of this. But seems like a 2017 wall of worry to me. Interesting. I'll have to check that. So this comes back to Jonathan's question about the power law in terms of other things. So a gold Bitcoin power law or power curve works totally perfect. It's 95% R squared. But we do have this very interesting, again, also above the 90th percentile every time. But as I've said, we have this very interesting phenomenon that because of gold and silver's just massive performance over the last 2 years, it's really flattened this out in a very interesting way. I mean, look at that. We've gotten down in the last week to the 2. You know, some people have said, okay, well, maybe this is just the new normal for gold. This is the new normal of how Bitcoin needs to be relative to gold. I have a hard time accepting that. I guess I should have the gold price itself up on this chart just to show you, but gold's basically flat the entire life of Bitcoin, right? We had a gold run here, all right, in 2011. And even with that, Bitcoin still outperformed it. Okay, and then again, 1 ounce of gold. Look at all those rainbows turn from 0 to 1 in 2017. And now, even though Bitcoin is cheap relative to gold, it's still 30 ounces. The trend says 60. So back at the envelope, by the way, I know I have a different chart which shows it going into dollars, but you can basically double. Like if Bitcoin returns to the normal, i.e. what it's done throughout its past performance versus gold, then everything you see here could double. Like everything you see here could be twice as good. All right, so where, for example, it says here by the end of the year, the trend is 125K. In gold terms, Bitcoin's undervalued by half. So if Bitcoin gets back to the trend line by the end of the year, in gold terms, it would be 250K. And gold stays the same price as it is now. It's another layer of complication. I'd say it's easier to look in dollar terms, but this is sort of getting back to your question, Jonathan, like the power law works with any asset relative to Bitcoin. You can do oil, gold, stocks. You could do a bond fund. It's hard to do bonds. You need to do a bond index, but it works. It's just a question of sort of the relative value of those things. And yes, gold is doing great. I commend Peter Schiff for finally getting a little bit of a win versus Bitcoin. But 30 ounces of gold per Bitcoin, you know, I would say to gold bugs, you better think twice about holding your gold through that. So let's look again. We can say Bitcoin was overvalued in the 2021 first boom, as it was in dollar terms, but 33 ounces of gold then, now only 25 ounces of gold 26. So Bitcoin's on sale for you if you're a gold bug. You know, the best it got in recent years was 10. And by the way, if we fall back to the 1, this is a great example here. If we fall back to the 1 by the end of the year, what's the 1 say? 23. Gold has a super strong tailwind. It could absolutely happen that we go to the 1 and we start sort of tweaking our minds around higher gold for longer. Totally can happen. But everybody's, at the end of the day, has the same knowledge. All right, they see that Bitcoin 8 years ago was only 1 ounce of gold. All right, so there's just nothing in this chart as sort of bad as it is for Bitcoin, good as it is for gold, that tells me we're going back to 1. It's just not, it's not happening. By the way, Fred showed me his book, Bitcoin 1 Million, and how he wrote it with the help of Claude. It's pretty interesting. I had the help of a Finnish coder to put this little chart engine together, and I mean, I use GPT to help me around the edges, but actually I think with my website and everything else, I could make a lot of headroads with some of the AI potential with coding. It is incredible. So good things to come. We'll get a better view. Price is the best signal. All right. Dollar is still king. And I don't say that with any glee, but all right, you guys know which chart I'm going to show you next. A lot more to say about the conference, like I said, in LA, which had a lot of high net worth individuals, more investment focused. Although there's certainly, being in California, there was a lot of tech focused investors, coders as well. But lots to say about it in the future. But the narrative remains to many that the dollar is going to zero. Bitcoin's taking it over immediately. That's not happening immediately, right? It's $1,100 quadrillion goes through the Fed a year. Bitcoin has 8 trillion. Did I say that right? 1,100 trillion, 1.1 quadrillion. Right? 1,100 trillion versus 8 trillion. It's not that I don't want it to happen, not that it can't happen. It's just going to take some time. It's a big difference. By the way, the gold is the same type of money. So for all the gold bugs, tell me how gold is going to accrete faster in terms of central bank settlement than Bitcoin. Not an effing chance in the world. no chance in the world that gold does better than this performance of Bitcoin. I don't know, by the way, how, it's a good question. I don't know what the actual flow of ounces is, like between central banks. I know the value is $3-4 trillion worth of gold, right? Which is a lot, but more than the market cap of Bitcoin. But how much gold flows between central banks? It ain't $1.1 quadrillion worth of gold. No way that gold can compete with Bitcoin on this metric. It's only the dollar or Bitcoin as far as the velocity of money is concerned. Gold just cannot keep up. Unless, of course, you abstract some digital ledger for gold, or you try to put gold on the blockchain. But that's, as we all know, that's not good enough. It's going to be centralized. It's going to be controlled. It's not good enough. When did I say that? When did I say that? Well, yeah, this is what Peter Schiff tries to say, is gold can just, you can put it on the blockchain and it's better than Bitcoin. Absolutely not. First of all, what blockchain? Second of all, who's going to audit it? How's that audit process different than today? I'm not a hater on the store of. I remember Adam Back said something like this, which I actually agree with wholeheartedly. Well, let me show you in the projections. But it stands to reason that if you're a Bitcoin investor, one of the many Bitcoin investors that have been selling for $100K worth of Bitcoin, and there have been many. See Checkmate's work, and I'll try to get some more data points on that soon. It stands to reason that you might want to diversify, right? You had 10,000 coins, maybe you can sell 1,000 and have a pretty good diversified life into some real estate, some gold, whatever. It stands to reason that Bitcoin investors will buy gold. Absolutely. So remember, even though Bitcoin goes up a lot, the gold market cap will also go up. Although one goes in power, one goes in exponential. So we are way overvalued on the gold trend, as we've talked about. Right? Like literally almost double. $10 trillion over trend. It's just incredible. The trend says we should have 13. This is only based on the last 15 years. So based on the shitty 15-year price performance of gold, the available gold stock should only be about 13 trillion. It's 23 trillion. So as you can see by this little drop, right? Very simple chart, right? I'm just showing you past performance into future projection. We're way overvalued on gold. And I believe that we're overvalued. I mean, it's just, I do. I believe in trend lines, and this is what the trend says. Even though it's only a 71% R squared, growing at 6.6% per year CAGR, that's what it is. And remember, why can I not show a CAGR for Bitcoin? Because power curves don't have constant CAGRs. They decline in growth. But anyway, the point is, the long-winded way of saying all that is gold will grow too. Even though it's hilarious, the trend of gold, when Bitcoin passes it, is under the valuation of gold right now. That's kind of weird, but that's what it is. I've said this before, I could take the current price and then just project it out on this trend. So we would get, say, not passing here, but say maybe here. Okay. I could do that. So maybe maybe it'll take us to 40 trillion to pass gold instead of 20, which is about right? So we're double. Now we just keep the same CAGR. So instead of passing at 20, we pass at 40. Possible. But that won't change Bitcoin's, that won't change this beautiful 96% R squared on the power, on the Bitcoin market cap or price. So yeah, I think Bitcoiners will and have been divesting Bitcoin for gold, or divesting Bitcoin for real estate or stocks. It's natural. But that also means that other people are going to take those bags, which, as we know, aren't really bags. They're beautiful UTXOs on an immutable ledger. Wall Street people, ETF funds, they're going to take those bags and run with them further. And by the way, there's way more Bitcoin value. This is another thing I need to show you guys very, very soon. Anybody know offhand the Bitcoin ETF value? I can just do it. I got 150 billion AUM. Is that right? Or is that Gemini just being stupid? Gold is less than that. Actually, I shouldn't say that with such confidence because the price has just exploded. Let's just ask Gemini that. Yeah, it's higher now. It's higher now. Okay, so Bitcoin ETFs have used to actually be bigger than gold, but with gold's extreme price rise, now gold is 472 billion. It's not going to hold. I'm pretty confident that's not going to hold. Yeah, exactly. Great point. I also heard Kramer say that Bitcoin or crypto is going to wreck Americans' portfolio. That's a good sign. Inverse Kramer will. Good for you. Very good for you, Gio. So yeah, I gotta get the old Bitcoin versus gold ETF valuation chart up for you, but it's unsustainably high. I'll show you another chart which shows you that that's unsustainably high. I've shown you this before. All right, so again, gold does not look like here's Bitcoin. It's a curve, like on log linear space, it's a curve. On log linear space for gold, it's a straight line. It's a straight line. This is a straight line. It's expo growth. Now, where are we here? At $4,132. This should be at today's price, or roughly today's price, even though this is a monthly chart otherwise. We're above the 97th and a half percentile, or the roughly, that's like kind of like analogous to 2 sigma. We're above 2 sigma. Now, it could be like here, where we pull this up for a long time. We go at, from 790 to, we double. So maybe we double again, maybe. But we don't triple, quadruple, whatever, quintuple. Could be here, where we're at 190 and well, here we do, because it's from such a low base, it pulls it way up. But we've set in a trend. Like the world has thought about gold for 55 years being free floating. No matter what Peter Schiff, Jim Rickards, Jim Rogers, those guys have varying degrees of appreciation for Bitcoin. It's just not. And by the way, notice the straight line from past into future, right? So doesn't mean it has to continue, but we've been on this trend pretty much since the life of Bitcoin. I know we're bullish on, I know the market's bullish on gold. I know it's growing, but this does not, there's nothing here in this chart, as you can see, which says that we blow above the 9, so to speak, in my language of the rainbow chart. If anything, we pull up the 9 or something. I should just make we are above the 9, it's true, but it's just like Bitcoin. If you go above the 9, you could usually come back down pretty quickly. With gold, it's been the same. This was above the 9, then it came back down. This was above the 9, came back down. I'd be extremely surprised if Bitcoin stays above the 9 here and just stays above it. Goes above and stays above, and all of a sudden this black line starts going on a way faster trend. Even with all the money printing, even with all the lower interest rates, or the talk of low interest rates, this is a 50-year trend. So when I showed you here, right, this 23 trillion going back to 13 trillion, that's analogous to showing you how we're at $4,000 price. The trend is 2,000, right? So I project out basically on a $2,000 price. And there's just there's nothing exciting about that. Sure, like Jamie Dimon said, hold a couple percentage points in gold, but let me come back to you on this with the every 10th. Do I have gold in every 10th? I don't think I do. No, I don't. I'll come back to you. Point is, just imagine this is not the 9, but the 9.7, right? As it is. It can hit it, and it can even pull it up for a long time. Actually, in this case, it's a good example. It pulled it up for 3 years. It could do that. Right? I'm not saying it can't do that. It can do that. Gold, we could double again. But it's not staying there. It's going to set a top end, exhaust buyers, and then come back down. That's just what markets do. So that brings us back to this chart, which is the power curve. Oops. Bitcoin in terms of gold. I think you got options if you're a gold holder, but you don't have them for too much longer. Again, this is just a question of percentiles. It would be extremely, unbelievably surprising if Bitcoin went back to being worth 10 ounces of gold. Even though that was only 3 years ago, due to the powerful nature of the power curve, I dare say we never hit that again. Let's say 20 is possible. 20 is possible. Just so you see what I'm saying, I'm saying we fall back to the 10. 20 is possible. 10, 1, no way. No way. And by the way, it's looking like it's getting pretty close to the 1. We're at 26. If this turns around, this would be explosive for Bitcoin's price. Think about that. Like if this reverts to the mean, you double whatever this would be, as I just said. All right, so instead of being 125 on the trend, all of a sudden, the gold influx back into the Bitcoin market could take us to 250, i.e. above the 9 very easily. Very exciting, ladies and gentlemen. Very exciting, in my opinion, what's going to happen in the next couple months. Stick with me. I'm happy to show you more. Totally possible. You ready to ink that in for sure? How do you know for sure? And by the way, Jonathan, I think I mostly answered that, but like a what if is just, to me it's just a question of probabilities. So what if means you go to something like here. You could even pierce below. Look, we did it before in terms of gold. We went, the 1 was 11. This is also another, the particularities of log scale. So, yeah, if I take, I blabbered about this at the start of the video. There's really huge distances in log space. It's wild, but so let's take the trend off to see how far away. Okay, now we're pretty close, like almost linear. It's just how the chart draws, but okay, so here it fell. We were at 12, 13 ounces of gold per Bitcoin, fell to 9. The 10th percentile is 11. Pull it out to where we are. If, as you say, gold keeps pumping, Bitcoin keeps dumping, let's say in terms of gold or in terms of dollars, we could then, I'd say, probably even pretty easily in terms of gold hit that 1. We're already at the 2. Okay, so gold is super, super, super strong right now, both in terms of dollars and in terms of Bitcoin, even with the drop that it just had that scared everybody. But notice what the 10 is now. The 10 is not 11. The 10 or the 1, the 10th percentile, the 1 on this chart. It's just the only numbers I could find of these icons. Instead of 11, it's 21. All right, because of the nature of how Bitcoin grows, how gold grows. I should say something silly like I'll eat my hat if gold goes back to 1 ounce of gold per Bitcoin or something like that, but I'm not going to say that because I don't like making those bombastic. It's extremely low probability you fall below the 1. It has happened before, but look how often and for how long. November to January. Month and a half. Okay, 2 months. That's setting a bottom. But a bottom here is not 1 ounce of gold. It's not even 10 ounces of gold. It's 20 ounces of gold. So again, if you're listening to this and you're I don't want to be ageist, but let's say you're on the older side. You've been hodling gold for 50 years. Bitcoin's not getting any cheaper. All right. On the very, very short term, it is. Yes, it's true. It used to be 40 ounces. Now it's only 25. So it is getting cheaper on the very, very short term. But on the trend, I can almost say with absolute certainty it's not going back to 1 ounce. Almost. As you know, I don't like to be so categorical, but look, it's just, gold is just very strong relative to Bitcoin at the moment. It does not mean it's staying that way, and it does not mean it's going to blow through this one. My opinion. So that's my answer to these questions. You have anything empirical to say about this, Gio? Because I would be fine if it was the blow off top. As I said, it's pretty rich here. Pretty rich. This is a monthly, by the way. That's why it's not, you don't see this just shows September value and then today's value. That's what it shows. My pleasure. My pleasure. I very much look forward to getting some more on-chain stuff. Let me just show you. I think Checkmatey had a good. Here's another good example. All right, this is totally from Checkmatey. All right, stealing his great work. But I'll get you some more charts like this in my format. But all right, what does this chart say? It says every time a coin moves, what's the average age? All right, or days destroyed, as they call it. It's higher. It means these are older coins being spent by the very definition. All right, and I don't have this chart pulled back. This is pretty deep. This is to 2014, so great chart. Obviously in 2014, Bitcoin was only 5 years old, so. But as he's saying here, the axis goes up to 350. So we're at these are all-time highs. These are extremely old hodlers. Selling. Of course, that's going to dampen the price, smooth out the price. I'm not sure how much of a topping call this is. Clearly, you know, you can see at the tops that they cluster, and we've been clustering. But the scale of this top versus, say, here or here or here is pretty extreme. And the price just keeps absorbing those coins. So I'm sure you've heard that story. It's been going around for a while, but that's I need to get more on-chain stuff. That's what's coming. I'll get you that soon, guys. Thank you, sir. Thank you. What does it mean, 16K AM gold? You talking about something with the very latest price action? I'll say it one more time. Probabilistically, we spring back to the trend. Okay? Which is 70 ounces of gold per Bitcoin, 60, 65. Probabilistically, we spring back to the trend. Doesn't mean we do it overnight. Probabilistically, we do not stay in these blue zones for long. All right? Now, it is true. Those probabilities are based on a relatively flat gold price of anywhere from, you know, $1,200 gold back here down to, you know, 1,000, then back up to 1,700. That is most of the life. And then only in the last 2 years springing up. Let me just show you the price again, obviously. All right, so we got all the way up to 16, 1,700. I said 12, even higher. I was blanking out. We did almost hit 2,000. I don't think we closed above 2,000. This is monthly, not daily. But I don't think we hit 2,000 here. So anywhere, 15, 16, 1,700, all the way down to 1,000, back to 1,700. This is most of Bitcoin's life is here. Let's just zoom into here. All right, so it is true that relative to today's price, you know, this chart is drawn with, you know, over the whole life of Bitcoin is drawn with these prices, which are not that, you know, not that exciting if you're a gold bug. So this skews that power curve in terms of gold the most. And then this is why it looks so cheap, Bitcoin in terms of gold, because of here. But again, I don't think this is sustainable. For how long? I don't know. It could be 3 years that we're above this red line. Or it could be 3 months. But relative to what Bitcoin does, relative to the cycles, relative to Wall Street adoption, I have a very hard time believing that this stays low for long. But we'll see. Right. So that, I see what you're saying. So yeah, that's here. That's here. I should put I guess just an axis of gold and Bitcoin on the right side, but in dollar terms. The low is here. This is 15, 16K Bitcoin, which is, you know, still 10 times the price of gold. And so from the bear of Bitcoin to now, we're triple. Basically 3x. From the bear, don't zoom too much in. From the bear until now, we're 3x. You know, I'm not saying it springs back tomorrow, but it's just not, it's 1 in a million to go back to 1 ounce. Like Peter Schiff would love it, but it's just 1 in a million. Here's the all-time low. Wow, that seals it, actually. That seals the deal. So you got to go back to the 0 percentile, which I never show because it's so extreme. You got to go back to here. All right, so remember, the trend at the time didn't really look like this. It more looked like this. All right, this is as the trend evolves. And if you hit it here, right there, boom. That multiple versus the power trend is 0.1x. That's the 0th percentile. it means the lowest Bitcoin has ever painted versus the power trend. And let's see how low it's got to go here. First of all, let's see how close was this again shows you the log scale craziness. If I take this off, whatever. I've said that too many times. All right, so 9 ounces of gold is below the 10th percentile, but it would have to get to 4 to put an all-time low in Bitcoin versus gold. Now, trend keeps pulling itself up, as you do, 8. So there's your number, basically. Peter Schiff would win if somehow Bitcoin went back to 8 ounces of gold and stayed there. It's not going to happen. This is why we do these deviations, these percentiles. We like to look at the top, right? The top extremes. And they're not going to happen again either, by the way. But neither are the bottom. So here's your extremes for the end of the year. 8 ounces of gold per Bitcoin on the low, 645 ounces of gold on the high. Neither is going to happen. Mark my words. I'm not going to say I'll eat my hat because maybe it will happen. It's a 99.999% chance that neither happens. Not 8, not 645. And then we go down the list. All right. It's a 90% chance we don't get to 23 ounces of gold, which, by the way, we're really close. We're extremely rare to the downside right now at 26. It's the current price. It's also 90% chance that it doesn't happen to the upside of 125. So that's how I think about this stuff. That's what keeps me calm. We are super low, though. It is wild. All right, we are low. 26.5 ounces of gold as of today, or yesterday. Do I have today on this chart? 26.4 as of like an hour ago. And the kicker for us Bitcoin fans is that if it springs back to the mean, it's not exactly the mean, but it's close enough. If it springs back to the trend, then that is 66 ounces of gold, or double what it is today, i.e. that takes us to the 9 here. Not just the trend, but the 9. So not just 125K, but 250K. So that's how it all translates together. Extremely interesting, guys. I didn't actually plan on going in depth on that, but see, this is why I do it. It helps me. Your questions help me as well to dissect this. And we're going to find it all out in 3 months. All right. I'm not hungover at all, but I feel hungover after the long flight. So I'm going to call it for today. Thank you for watching, everybody, as always. More good stuff to come. Excited to be here with you as always. And thanks again, Stephen, for meeting me at the conference. And all the other good folks. I'll have more to say about that later. Thank you, Daniel. Take care, everybody.